Hopefully now you understand why I said UK house prices fall to 40-year lows. Yeah, it depends what you measure it in. Yes, in fiat pounds, the pound that fluctuates every millisecond against other currencies, yes, we're at all-time highs probably for house prices. But in real money, the sovereign, the pound, it's at 40-year lows. Friday, October 18th, 2024, Maneko 64, home of alternative economics and contrarian views. Well, we're going to look at how UK house prices have fallen to the lowest level in 40 years. And yeah, don't turn me off, don't tune off. It's real. You might be asking yourself, though, what are you talking about? Well, listen to me. It's just going to be about 15-20 minutes and you'll find out. And we're going to look at something that might give you a hint before we look at UK house prices. And that is the fact that Bank of America, yes, one of the major Wall Street banks, is actually waking up to the fact that gold is the ultimate safe haven. And I'm not making this up. It's out here from an article in Business Insider yesterday, and it says, gold is the last safe haven as treasuries face risks from soaring U.S. debt, Bank of America says. So I wonder if they've been watching some of my videos, the guys at Bank of America, and maybe they saw this chart that I've been talking about, which is the price of gold divided by the price of the 10-year Treasury note. And it's a constant maturity Treasury note, because a Treasury note of 10-year maturity that is issued today in 5 years' time will not be a 10-year note. But there's a way to get a constant maturity price. And as you can see, gold is breaking out versus treasuries. So maybe they did watch some of my videos. Who knows? But let's quickly go through this article and then we'll switch over to UK house prices. Maybe you're starting to get my message here about house prices, why they've fallen to the lowest level in 40 years. And one hint I will tell you is it depends what you measure them against. But anyway, let's go through this article here quickly. Gold is increasingly attractive as other traditional safe haven assets face mounting risks, Bank of America strategists said. The strategists said investors, including central banks, should rotate into the precious metal, which bulls tout as a hedge against inflation and debt debasement resulting from rising government borrowing. Yeah, I've been warning about that. And yeah, inflation or currency debasement, that's the same thing. Gold looks to be the last safe haven asset standing, incentivizing traders, including central banks, to increase exposure, the strategists said in a Wednesday note. They explained that with U.S. debt expected to keep soaring, Treasury supply faces risks. At the same time, higher interest rate payments as a share of GDP will make gold an attractive asset in the next few years. Rising spending, and they mean government spending, isn't also merely a U.S. issue. The analyst notes that the IMF, or the International Monetary Fund, predicts new spending could amount to 7 to 8% of global GDP annually by 2030. That's massive. Ideally, you want government to run a balanced book. The European Monetary Union has a rule of 3% being the maximum. So they're talking about 7 to 8%. Ultimately, something has to give. If markets become reluctant to absorb all the debt and volatility increases, gold may become the asset of choice. Central banks in particular could further diversify their currency reserves, the analyst wrote. And I will add that family offices, hedge funds, people who manage a lot of money for wealthy individuals, on average, they hold very little gold or gold related assets like miners. It's probably around 2 or maybe even just 1%. So can you imagine if they increase that percentage like to 4 or 5 or even, 10 would be huge. Anyway, let's continue. With neither candidate for the upcoming U.S. presidential election prioritizing fiscal discipline and a pullback in spending, national debt is projected to hit a record high as a share of the economy in the next 3 years, the analyst said. That will increase interest payments as a share of GDP, making gold an attractive asset amid concerns that markets won't be able to absorb new debt, they added. Indeed, with lingering concerns over U.S. funding needs and their impact on the U.S. Treasury market, the yellow metal may become the ultimate perceived safe haven asset, the analyst said. The analysts reaffirmed their target of $3,000 an ounce for gold by the end of next year, which implies an 11.1% upside from levels on Thursday. The analyst's bullishness for the metal comes as worries grow over mounting spending and debt around the world. Investors have increasingly looked to gold in recent weeks as the Federal Reserve, kicked off its easing cycle with a 50 basis point interest rate cut last month, driving the price of gold to gain around 4.3% in the last month. Central banks around the world have also increased their share of gold as a portion of total reserves. The Bank of America analysts note that gold now makes up 10% of central bank reserves, up from 3% a decade ago. So I'm going to stop right here. You're probably wondering, what are you talking about, the UK house prices? Well, I was talking about gold, right? And I've done other videos on this channel in the last few years about the nationwide average house price in the UK. You take that and you divide it by the price of gold, the ounce of gold, and you get the ratio. And that's what it's all about. And that ratio, I updated it yesterday. And I can tell you that we are at the lowest level since 1984. So it's a 40-year low. And as of yesterday, I took the average house price at the end of the third quarter in the UK. And I've got the data here. It's easy to get. It's public data. So at the end of the third quarter this year, the average house price was $266,640. And I took the price of gold where it was late yesterday, Thursday, the 17th of October. In pounds, of course, it was 2,069. And yeah, so as you can see by this chart, it takes now just under 138 ounces of gold to buy the average house price in the UK. And you can see that it was pretty much the same level back in 1952 when the nationwide started compiling the average UK house price. It's not the lowest level, as you can see here. Back in 1982, we got to just below 81. That would have been the best time to buy a house if you think in gold. And we're going to come to that in a minute, because very few people realize that we have a dual monetary system in the UK. Yes, Believe it or not, we do. And you might be asking again, what are you talking about? This guy's crazy. We've got the pound and that's it. Well, just bear with me. One thing I wanted to show you from this chart is the high, of course, back in 2004. So it took 672.1 ounces of gold to buy the average house back in 2004. So that was 20 years ago. So what that meant is that that was the best time if you had more than one home, because I don't believe you should trade your home or your house that you live in. Of course, sometimes you might want to move, but it doesn't really matter unless you move to another country. You're going to be paying relatively the same amount when you move to another place, unless you move into Kensington or West London. That's a different story. But yeah, that was the best time to sell a house and buy gold. And do I think there's potential for a lower price of houses versus gold? Definitely. I mean, I think we will go and test that 81 level from 1982. And the thing is, we had such a huge run up from the late 90s to 2004 that it's going to continue. I think we're going to probably go through that 81 level, in my opinion. Or even if we don't go through that level, there are several ways in which that ratio can move. One is house prices might still keep going up because the government and the central bank will keep inflating the fiat pound, the paper money that we are forced to use by legal tender laws. And what that will do is, yes, house prices will probably go up to 300,000, the average UK, but gold will go up even faster or just keep up with it. So a lot could happen in this last move here, I would say, and I think it favors gold just because of what we just read, what Bank of America was talking about. It's not just happening in the US, the debt problem and the government spending problem. It's happening here in the UK as well, and we don't even have the major reserve currency, even though I know the US dollar is losing that status very quickly. So there you go. The lowest UK house prices in 40 years. So you might be asking, what was the average house price in 1952? Well, it was 1891 or 1,891 pounds. And the price of gold from 1952 until 1966 was 12 pounds 50. It was fixed because back then gold was money, the US dollar was fixed to gold, and the pound was fixed to the US dollar. So 1 ounce of gold was $35 and 1 pound was $2.80. And if you do the maths, you divide 35 into 280, you get 12.50. So what happened in 1967? Why did the price go up to 14.58? Well, the UK devalued the pound versus the dollar from 280 to 240. And after that, after 1971, of course, that all went out the window because the dollar detached itself from gold. And I'm going to do a little exercise here to show you why the current exchange rate of the pound to the US dollar is derived from gold. And you will understand why gold is money and is so important, and why institutions like Bank of America are waking up to it. So right now, the exchange rate, you get $1.30 roughly for a pound. But if you go back to prior to 1914, when we had the gold standard, the exchange rate was 4.866 or 4.87. So for £1, you could get $4.87. That was the exchange rate that was in place for decades, and it was always that rate. It might have changed during wartime sometimes, but what it meant is that, and people might think, why didn't it trade freely? Well, because the dollar and the pound were weights of gold. Money is a weight of gold, a commodity. It's fixed. You can't cheat, right? But what we've had since World War I is cheating. And I'll show you here, and you can do this exercise or you do the calculations, because you might not have a sovereign from 1895, as I have here, right? Queen Victoria, again, 1895. And I've got a $5 gold piece, as you can see here, $5 from 1899. So how did the exchange rate work? Well, these coins, they look pretty much the same, don't they? But they're not. The $5 piece is a bit heavier. It's 8.4 grams, or just under 8.4, and it's 90% gold. So you take 8.4, multiply it by 0.9, and you get the amount of gold, pure gold in the coin. The sovereign is about 8 grams, or 7.99, but it's 0.9166 pure. So you multiply that 8 grams by 0.9166, and you get around 732, 733. And if you do the maths, this is a pound. The sovereign is a pound. And we're going to come to the current dual system in a minute. So the sovereign is a pound, and that is $5, of course. But if you do the maths of the content of gold, you get £1 will get you 4.87. And a lot of people think, well, the pound is worth more than the dollar because it's a stronger currency. No, it was all related to these two coins, or you can use other gold coins to calculate the exchange rate. Of course, now, as we are in a fiat currency-based system, where there's a foreign exchange market, where the exchange rate changes every millisecond, it's a crazy world. Back then, things were steady. Yes, there were crises, but not as many as there are now. And the reason why I talk about there being a dual monetary system in the UK, and you can check that yourself. You go onto Wikipedia and you look at sovereign British coin, and it says the sovereign is a British gold coin with a nominal value of £1 sterling. So yeah, the sovereign, be it the one that was minted under Queen Victoria's reign or the one that's minted today, is still a pound, and contains 0.2354 troy ounce of pure gold. And the other important thing it says here, although the sovereign is no longer in circulation, it, along with the half sovereign, double sovereign, and quintuple sovereign, is still legal tender in the United Kingdom, having survived the decimalization of the pound in 1971. Another interesting thing about the pound that I'll tell you here, and I think it's one of the reasons why the price of gold has been going up quite a bit here in the UK, but not just in the UK, but anyway, is this one here: collecting and other use and tax treatment. As a legal tender coin, the sovereign is exempt from capital gains tax for UK residents. So there you go. And also the Britannias, because they're legal tender as well. Britannia is a 1 ounce gold coin. Anyway, so there you go. Hopefully now you understand why I said UK house prices fall to 40-year lows. Yeah, it depends what you measure it in. Yes, in fiat pounds, the pound that fluctuates every millisecond against other currencies, yes, we're at all-time highs probably for house prices. But in real money, the sovereign, the pound, it's at 40-year lows. So I'm not here to try to tell you what to do in terms of real estate or gold. I'm just giving you my picture on value and where we are right now and what could happen. So let's quickly look then at where the markets are this morning. So gold has continued to go up. We've actually traded through $2,700 for the first time. We made a high of 27.14 overnight, and it's 8:37 a.m. by the way, London time. Right now, though, gold is back down a little bit to 27.05. It's still up $11. Low has been 26.88. Silver is trading just below 32. It hit a high of 32.20 overnight, and the low is 31.65. And I think silver, of course, is frustrating us a little bit. Yes, we're into silver too on this channel. But eventually it will unshackle itself, I think, and outperform gold to a really big extent, in my opinion. The stock market indices are pretty much unchanged. The pound is up a little bit this morning, mainly because the retail sales data were a little stronger than expected. So the pound is up 0.33% at 130.56. And what about the price of gold in pounds? Well, yesterday I used 2069 for the house price index. This morning, right now, we are at 2070 because the pound has gone up versus the dollar because of those retail sales number. But the high today has been 2083. So that's what's going on in the markets. And hopefully, if you enjoyed this video, make sure you think about subscribing to my channel. We're approaching 113,000. Hopefully, we'll get to 120, maybe before the end of the year. Who knows? And with that, I'm going to wish you all a very good day and a very good weekend. Take care. Bye.